Hey guys, I'm Hav, lead market analyst over here at SwiftX, and I'm here to give you all a quick 5-minute update, technical insights on what we're seeing in the crypto markets today, 7th of December, 2023. So, a big running theme right now is Bitcoin getting toppy. We've had 6-7 weeks of continual green candles. How much further can we possibly go? So what I did today, we'll jump into some coins as well, some assets, but we'll also basically have a look at, what are some potential targets for Bitcoin in this rally on a technical basis. So a key way to map out a market cycle like Bitcoin, historically speaking, is Fibonacci levels. So measuring from the top of the previous all-time high to the bottom. So by doing that, splits out the market basically into price segments. And each of these checkpoints essentially generally is at good levels where traders usually are taking profits. And what we generally do see anywhere between the 61.8 the 78.6 for Bitcoin in the past has been a regular profit taking area. So, we've still got a bit of upside left till we hit those levels. Now, secondly, we also have a March 22 high. So the significance of that, it's one of the few monthly levels that are left, which was a key monthly high before price broke down further and created what was, I guess, now known as the bear market downtrend that we did see. So you can see here, we started about 47.9 and then we ripped all the way down to 15K. So this will be definitely a level where a lot of players will be marking as a key monthly high to sell at. And then from there, obviously, we'll just wait to see, is there further accumulation to have any interest to push higher? Do we potentially just scream straight through it? There's a lot of scenarios that could play out, right? But it's more about identifying where should we be paying attention. And what I quite like about this from a technical perspective is there's a bit of confluence. So we've got stacking factors. So, we have the Fibonacci level and the March 2022 high, both landing at about, that mid-range of 48K. So, from a technical perspective, that'd be one to keep an eye on. And in the meantime, we're currently just at the cycle midpoint as well. So 42K there. Essentially wait to see if we find a bit of accumulation here. And there's no real time horizon on when we could go up here, but this is definitely an area I've been watching. Now, some assets to keep an eye on. There's been some really interesting weekly trends that have been developing, especially across the higher cap coins. So everyone's favorite OG meme coin, Dogecoin. So we've seen these two key multi-month resistance levels having been broken. Dogecoin really hasn't seen too much action since its absolute huge pump back in 2021. That was off the back of those Elon tweets and the mania that followed after that. But what's key here is we have broken, two consolidating ranges and we've put in some consecutive green weeks. So that's a good sign of strength. It can be quite hard to jump onto these trends once they're already moving, but, some technical targets from here, again, using Fibonacci and previous monthly highs before we've broken down. You've got a 21 cent range here, and then also up here, just the cycle mid-range of 39 cents could be another potential area of interest as well, should this uptrend hold. So there's nothing to say we can't come back, potentially retest this sort of 8 cent area. That was the last low before we broke higher. That can often be an area for a retracement. But, if the market holds up in its current conditions, we see, Bitcoin specifically holding steady. There's nothing to suggest that this current uptrend in Dogecoin couldn't look like, the uptrends that we've been seeing across Bitcoin lately as well. So it could just be one that just rolls and doesn't come back. So that's just something we're seeing there as well. They're interesting for the Cardano fans. I know there's plenty out there. Similar sort of setup as well on a weekly basis. So, we've had that multi-month resistance level broken initially, then created another consolidating range, which is broken as well. And then in October, we've just seen a rally, consistently green weeks as well. So similar story to Doge, really not too much to point out differently. There's also monthly highs that are aligning nicely with some Fibonacci levels as well, just to keep an eye on. But, what's key here is these lows were defended quite heavily as well when we broke out on both Dogecoin and Cardano. So that definitely is a good sign of accumulation. So now we'd be looking for the opposite, where are these people that have bought down at these bottoms, where are they then sort of letting their positions exit? So that'd be one to watch. Other than that, that's the roundup for today. We'll definitely jump in next week and do some more deeper dives. Obviously, these are more macro weekly setups, might take a few weeks, few months to sort of play out. But, in our future editions, we'll also dive into some more, intra-week, intra-month positions as well. It may be sort of lining up on a technical basis too. But overall, the Bitcoin, would expect some consolidation, as we mentioned at the start, but still some healthy targets, still above price. And, we still have the bullish tailwinds of the ETF still to come as well. And retail still only just starting to get involved and taking nibbles. So it'll be an interesting space to just watch for the next few weeks. And we'll be here to unpack it with you week by week. Awesome, guys. Thanks very much.